What's up, boys? Today I'm gonna teach you guys how to find daily bias. And daily bias is really important because if you don't know where the market wants to go before market open, then you're probably just cooked because you're gonna be, taking random trades to the opposing direction, getting fucking liquidated. So I'm gonna teach you guys how to basically know where the market most likely wants to go before the market even opens. And finding daily bias is pretty simple. You just ask yourself these two questions: what are we delivering from, and what higher time frame PDAs are currently getting respected slash disrespected? So first we need to identify where we're delivering from. Are we delivering from buy side liquidity or are we delivering from sell side liquidity? If we are delivering from buy side liquidity, then you can anticipate a bearish bias. If we are delivering from sell side liquidity, you can anticipate a bullish bias. And you can confirm your bias from this by asking yourself this question. So to confirm this, you basically have to see if we're delivering from buy side liquidity and disrespecting bullish PDAs, then you can anticipate a bearish bias. If we're delivering from sell side liquidity and we're disrespecting bearish PDAs, then you can anticipate a bullish bias and prices higher. However, when you don't see any of these, then you can anticipate a mixed bias where you can look for prices both ways depending on how these PDAs react. Now, usually if you have a bullish or bearish bias by looking at these statements down here, then typically you find yourself a draw on liquidity, and typically you are bullish or bearish until that draw on liquidity gets taken. And draw on liquidity is really important because if you know your draw on liquidity, then you typically know where price wants to go. Now I'll be going into some framework to really show you guys what I'm talking about. This is an example. If we just swept sell side liquidity inside this 4-hour bullish for value gap, and now we were disrespecting bearish PDAs, let's say this was a 1-hour bearish for value gap, then you can anticipate price to keep going higher until your next draw on liquidity slash your next rejection point. So as you can see in this example, price would most likely go higher until it reaches this 4-hour bearish for value gap. Since this 4-hour bearish for value gap is a possible point of rejection for price. Therefore, you should be looking for longs into open targeting this 4-hour bearish for value gap. There's no reason to be looking for shorts until this 4-hour bearish for value gap gets hit. Now, vice versa, if we're delivering from this 4-hour bearish for value gap and we just swept buy side liquidity and we are now starting to disrespect bullish PDAs, then you can anticipate a bearish bias until the next objective, which in this case would be this unmitigated 4-hour bullish for value gap. And once again, price will most likely be bearish until its objective gets hit because price has no reason to reject until it hits a higher time frame key level. Now let's say price is just in between these two PDAs, just going back and forth with no real draw on liquidity and no real, direction of where price wants to go. And typically this is just called a mixed bias, and how you determine when price wants to go is usually you wait for one of these higher time frame PDAs to be broken to then confirm that bias of either being bullish or bearish. So if this 4-hour bearish for value gap would get inverse to the upside, then obviously you would seek prices higher. Usually when price is just ranging between these two higher time frame PDAs, any trades you take in this zone will typically be lower probability. Unless you obviously already have a clear draw on liquidity outside these higher time frame PDAs. Alright, so this is an in-chart example. You can see here that we're obviously delivering from this daily bullish for value gap since we obviously respected it and now we're starting to go higher. Now you look over here across all these legs and you see that we're disrespecting bearish PDAs. We had this 1-hour bearish for value gap right here. And we had this one right over here. As you can see, we basically disrespected both of them. Therefore, price is bullish until this high over here or even all-time highs. There's literally no reason for price to reject until it hits one of these key levels. Therefore, this will be a bullish bias and you'll look for prices higher. As you see, coming into the session, this is what price does. So as you can see, our bias was correct. As you can see, this scenario is a little different. We're delivering from this 4-hour bullish for value gap. However, we have this 4-hour bearish for value gap in the way. So how we would establish a bias here is looking at the lower time frame. Now scaling down to the 30-minute time frame here, you can see that obviously price is respecting bullish PDAs over here and disrespecting bearish ones, I think on like the 15-minute time frame. Yeah, as you can see, we had this 15-minute gap right over here and that got completely ran through, sending price higher. Since we're respecting bullish lower time frame and we're disrespecting bearish lower time frame, then you can anticipate this 30-minute bullish for value gap to get respected and then send price higher to our next draw on liquidity. As you can see, we have all-time highs right above, which is an A+ draw on liquidity. However, let's say this 30-minute bullish for value gap didn't get respected and it got straight up ran through. Then you can lean bearish since we're still delivering from this 4-hour bearish for value gap, and as long as we start respecting bearish PDAs, then you could be bearish. However, as of now, since we're obviously respecting bullish and we still have a draw on liquidity to the upside, then you should lean bullish. And as you can see, once again, coming into market open, all-time highs basically gets ran through within a couple minutes. Kind of showcasing how important daily bias is. Now this is really important because if you're looking for shorts out of this 4-hour bearish for value gap, then you're literally just going to be looking for trades to the opposing direction, when clearly our drawn liquidity is all-time highs. Alright, another example here, you can see in this example, we sweep out buy-side liquidity, and now if we scale down to the lower time frame, you can see that we're clearly disrespecting these bullish PDAs over here, which gives us an obvious bearish buy since we obviously also have LRL at the lows, which is a very strong drawn liquidity. So obviously coming into market open, you should be looking for shorts targeting this LRL. As you can see, coming into market open, this shit gets flushed within a couple seconds. So to sum this video up, pretty much to find your daily buys, you have to see if we're delivering from buy side or sell side liquidity, and then afterwards you have to see what higher time frame PDAs are currently getting respected / disrespected. And all this together will basically tell you your drawn liquidity. Therefore, you should be looking for trades towards your drawn liquidity. An important thing I forgot to add is that once your drawn liquidity gets taken / that rejection point that you want to be targeting, then you could switch your bias from, let's say, being bullish to bearish once like a 4-hour bearish for value gap gets hit. So hopefully you guys enjoyed this video and learned something from it. And if you want to join my free Discord community, the link is in my bio.